One simple change can turn you into a profitable trader. A simple, easy change in your trading strategy that will really change your entire trading career. And by the way, guys, that's what trading is. Trading is not a magic casino where money falls out the sky. Trading is not cash cow. Trading is actually a career, something that you need to learn, something that you need to understand, something that you need to figure out. This is not something you learn in a day. This is not something that, you invest $100 and turn it into $1 million in 2 weeks, like everyone's telling you to do. It doesn't work like that. It's completely the opposite to that. Did you know that 60 to 80% of traders lose money? Trading is risky, and that's on the 4-hour or 1-day charts or weekly charts. On the 5-minute charts and the 1-minute charts, 99% of traders actually lose money. Now, I've been doing this for 30 years. And over the 30 years, I've seen them come and go. I've seen all the systems come and go. I've seen all the strategies come and go. And I've seen all the people come and go. All the wise guys, all the guys that know everything, all the guys that know all the little abbreviations about trading, all the guys that can tell you all about it are gone. And over those 30 years, I've seen the ones that have stayed, the stable ones. And it's always about the psychology. It's always about how you trade the markets, not the system that you use, not the win rate, not the little squiggly lines, not the little this, that, and the other course that you went on, that you paid thousands of dollars for. That's not what's going to change it for you in the slightest. That's not what makes you the money in the markets. Now, today, I'm just going to have a heart-to-heart chat with you guys. We're not going to go to the charts today, and we're not going to go over the system that we normally use, the price action system. If you want to know about the price action system that I use on a daily basis, and that everybody in this community probably uses on a daily basis now because they've seen that it works, then just go and look at my other videos and it's all there for you to understand. And it's quite easily explained because I keep it so simple that you don't even need a system in the markets. Once you've been to the charts and you've had a look, and once you've looked at my other videos and you've seen how these systems work, and you're comfortable with trading with price action, then you just need to understand how you can trade and become profitable in the market. Now, you'll say to me, but the system gives you the edge, because I'm going to tell you that the market's a 50-50 game. In other words, if I told you to take 10 trades now, in any way, shape or form, you would, in all probability, win 5 and lose 5. And you'll ask me why that is. Because it's a probability, it's like a coin toss. If I tossed a coin 10 times, you'd agree with me that 5 times it'll win for you and 5 times it'll lose for you. You chose head or tails. That's just the way of the world. That's how it operates, that you can't change that. Now, you'll say to me, but I've got a system in the market, so that should give me an edge. I should win 6 trades, 7 trades out of 10. No, what you have is a system which gives you a high probability trade, which, yes, will give you the possibility of winning more than you're actually losing. But the way you approach that is what makes all the difference. And this is what none of you seem to understand. Well, some of you do, but there's so many out there that don't understand this, that only see the win rate, that only see the system. What you've got to figure out with the squiggly lines is you take the high probability trade and you win 7 out of 10 trades. The trouble is the 7 trades that you win $10 on every trade, and the 3 trades that you lose $100, $200 on every trade. In other words, you're losing a fortune and you're winning very little. But you've got a win rate, don't you? So what does that tell you? Because let's be honest, if all the systems in the market, now remember I said to you, the market's made up of buyers and sellers, because markets are made, and you have people that want to buy and you have people that want to sell at the same time. Got to ask yourself the question, why is that? Why isn't it, if all these systems have an edge, if all these systems will give you the winning strategy, then why is it that everybody's not winning? Why is it that only 20% of people are winning on the higher time frames and only 1% of people are winning on the 5-minute time frames? And you'll say to me it's because some of the systems don't work, but that's not true. All of the systems work. All of the systems have been backtested by someone. All of the systems have been proven to be mathematically correct, and all of the systems have been proven to be great. So how can you turn around to me and say, well, some of the systems don't work? They all work. They all work perfectly. So what's going wrong in the market? Why are only half the traders winning? Why Why are only some of the traders winning and most of them losing? What's going on? Well, the only factor that makes the difference, that can cause that, is the traders themselves, not the squiggly lines, not the algorithms, not the markets, not something searching out stop losses, not some evil eye checking you out and looking for a way to grab your money. No, it's not like that. It's you, the trader. That's the factor that's making all the difference to the ratios of who's winning and who's losing in the market. Which brings us to the point. So how do we fix that? How do we fix it so that traders win rather than lose? Because now that we've identified that the problem is not with the squiggly lines, they work. And this has been proven over and over again because people go on a course, they pay for a course, they pay thousands of dollars for a course, and they do the course. And they come back so knowledgeable that they'll tell you they know everything about the market. I mean, they've learned everything about the market. Some of these guys come back from courses and they know more than I do. God, this abbreviation and that, and it does this, and it goes into that fair value gap, and the cheese moves over there, and the stars line up over there, and check what happens, and you can trade, man. You know everything about the market. You even know about brokerage stuff and all kinds of strange things. You could be a pro, man. You could go and get a job at Goldman Sachs, sit on the trading desk. And that's another question I ask you guys. Why are there pro traders sitting on a trading desk, not using their own money or not using a funded trader account or whatever the case? And by the way, if you want a funded trader account, it's in the description below. And by the way, I've got a free Forex book for you there as well. Go and grab it, enjoy it. But do me a favor, guys. I did try and put a link to a Discord channel for us. And I tried to put a Discord channel out there for us that we could use and chat and whatnot, and there was a spammer on it and it's not gone well and what have you. You know what? We've got a community tab on YouTube that we can use, and we've also got my Learn to Trade the Stock Market link in the description for Facebook. Join that, guys. Join that group and chat to each other on that group. There is a few other people there, a couple of thousand, but don't worry about that. Join it, and we'll chat on that as well. You can always mention who you are on the group if you want to chat or anything to that effect, and we can use that as well. So that's also available. And I've also got the Logical Trading page on Facebook as well that we can use. Don't bother with the Instagram. I actually seldom go there because it's not my thing. Okay, so just I interrupted us there, didn't I? So now that I've broken your train of thought and you're thinking, what the hell was Rob saying? Don't worry, I'm thinking the same thing. Anyway, to get back to it, we're talking about the psychology behind trading and what causes all the problems. Why is it that traders have really identified themselves as the fault when it comes to losing in the markets? Why would it be? And I asked this just before I broke the concentration. So just so that we can get back to it, so we can get back on track, I asked you, why do you think that pro traders, people who really know what they're doing, are sitting at a trading desk and not trading with their own money or with funded trader account money? Because they know what they're doing. These guys are supposed to be the supermen of trading because they're working for JP Morgan, they're working for BlackRock, they're working for all these people, and they're placing their trades for them, millions of dollars and big money. Why aren't they working for themselves? And that's because I've seen these pro traders sitting at their desks, trying to work for themselves, trying to eke out a living. And it's really difficult to do that. It's extremely difficult to eke out a living trading. And I'm going to tell you that up front. Don't want to scare you, and I don't want you to think, oh, what am I going to do? I need to make a living. Don't worry. As I've said to you before, if you're young particularly, start investing now. It's time in the market. Not on gear trading, not on the trading that we're doing now, but invest in stocks. Take some money and every month just put it into those stocks religiously. 10 years time, 15 years time, you'll have an income from that. And then you don't have to stress about whether your trading is making you money today or not. Just an idea. You can use it, don't use it, it's up to you. Bit of information from me to you. Nobody else will probably give you, because everyone else wants to charge you for a special course. Everyone else wants to charge you for everything. The only thing that I've got on here that maybe costs a few dollars is my membership with YouTube. I do the membership thing for a bit of sponsorship for the channel, just to, pay for small things like these mics and what have you. And I'm a trader by heart, and if I can make $1 off anything, I will. But yeah, let's be honest, guys. I'm not asking you to pay for a course. I'm not asking you for anything. I'm doing this from my heart because I just feel it needs to be out there. You also need to know the truth behind this. You also need to know that money's not going to fall out the sky if you start trading. But you've got to become good at this. You've got to get around this. You've got to find a successful way to make money. You can't just be jumping from system to system to system. Don't change your system every 5 minutes. Firstly, it's not going to make any difference to your trading. And secondly, it's not going to make you the money. What you'll find yourself doing is you'll find yourself losing a few trades on a system and then jumping to another system and then doing that, and it'll work for a while, and then you start losing a few trades there and then you jump off to another system. Don't do that. Don't do that. Just try and stick to one thing and try and master it and try and do it well. The other thing is, people tend to get told to trade with one instrument or one, either only indexes, only commodities, only Forex, or maybe only trade gold or only trade the US 500. Don't do that either. There's lots of instruments available out there. Trade with everything. It's all the same. There's no difference. They're all the same. That's why I'll even trade crypto, even though it's not my thing, because it's the same. It's just a chart. It's just a market that's made, and it's there so that you can make some money with it. So now, let me explain to you what strategy to use to actually make money in the markets, because this is where you're going wrong. Now you pick a strategy like we use, like the price action, for example. Now you say, I'm going to use price action. I'm not going to use all the indicators and whatnot. I'm going to do what Rob's doing. And by the way, for those of you who I haven't introduced myself to yet, let me introduce myself, because I see I do tend to forget to do that. I'm Rob. And for those of you who know me, obviously I don't need to reintroduce myself. You know me. Guys, for those of you who don't know me, welcome to my channel. Anyway, to get on with it, let me explain how you trade. You pick a system that you're using. Now, I don't care if you're using Fibonacci. I don't care if you're using moving average crossovers, MACD, whatever it is you're using. And I don't really care what time frame you're trading on either. I prefer to trade on the 4-hour because it allows me freedom in my life. It allows me to live my best life. I can take a trade in the morning, put it in, go away, come back later on and see how it's looking. I don't have to watch charts all day. I don't have to stress about it. I don't have to worry about it. Trading on the 5-minute charts, sitting there watching squiggly lines go up and down all day. Okay, that's what you want to do. If that's what keeps you busy, then spot on. Me, I keep myself busy making YouTube videos for you guys and showing you how to trade. That's a bit of fun for me, and I'm enjoying doing this. This is something I enjoy doing. Everything I do in my life is things that I enjoy doing. I don't have to do anything that I don't enjoy. I don't have to get up and go to a job that I hate every day. I haven't done that since I was 27 years old. Bet you'd love to know how old I am now. But anyway, it should be pretty obvious since I've been trading for around 30 years. Anyway, let's get to it. So, how you trade. The easiest way to trade, and the only way to trade, is this. You look at the market and you look at how much you want to put in a trading account. Doesn't matter which trading account it is. If you decide this is a $100,000 trading account, then that's a $100,000 trading account. Take your money, put it in there. Create a $100,000 trading account. Some of you will be 5,000, some of you will be 50,000, some of you will be $1 million. Doesn't matter. Let's just use the 100,000 as a round figure, right? Then what you do, no matter how high it goes or how low it goes, it's a $100,000 trading account. So don't change the figures every time you trade. You work on the $100,000. That's your account. That's what you started with, and that's what it's going to stay. If it turns into $500,000, it's still a $100,000 trading account until you decide that it's going to be a $200,000 trading account. And the reason I say this is because you have to be comfortable with how much money you're prepared to lose in the market. You have to be comfortable with the size of every single trade. You can't be uncomfortable with a trade. If you're uncomfortable with a trade, if you're starting to stress, if you're unable to sleep, if you can't stop thinking about the trade that you took, then you shouldn't be trading that size. It's too big for you. It's too big for you. And it's going to cause you to make silly mistakes. Because the basis of trading in psychology is this. You risk 1% on every trade of that account. So on a $100,000 account, you risk $1,000 on every single trade. No matter if you love that instrument or hate that instrument that you're trading, or if you feel that that one's better than that one, you trade the same on every single trade. You don't discriminate around the trades. If you feel you want to trade less on a certain trade because you don't like trading that, guess what? Don't trade it, because then you're not comfortable with it in the first place. Trade the ones that you're comfortable with and risk $1,000 on each and every trade if you have a $100,000 account. Obviously, if you have a $5,000 account, what, you're going to risk $50 or something like that. We're talking about a $100,000 account, so we're risking $1,000 on every trade. The point of this is to make more on your wins and lose less on your losses. losses, because you'll remember what I said to you. I did say to you, you need to trade 10 trades and win 5 and lose 5, because that's how it works. You remember I said that to you. So now you're going to take 10 trades at $1,000 each. If you were to lose all 10, you would lose $10,000. You would lose 10% of your account. That should never happen. But if it did, that's your worst case scenario as we stand. You're a rubbish trader. Everything goes wrong and you lose 10 in a row. Oh well, 10%. So you haven't lost your whole account. You've lost 10%. You're still in the game. You really are still in the game. And you can recalculate at that point. But generally, what will happen? You'll win 5, you'll lose 5. But the point here is not to win 5 in tiny increments and lose big amounts. You want to lose small amounts and win big amounts. How do you do that? You have $1,000 risk and your trade starts losing, goes into loss, and it gets to the $1,000 stop loss. What do most traders do? Most traders move the stop loss away because they don't want to lose, right? And you make your loss worse and you lose more. Don't do that. Leave the stop loss at $1,000. If it takes it out, so be it. Like I said to you, be comfortable with what you're losing and accept that you've paid for the trade before you even start. This trade's costing me $1,000. Put it in, that's it. Now, understand that when it takes that out, walk away, move on to the next trade. Don't sit there and watch it do what it's doing and really stress you out because it goes the other way after it bounces off your stop loss, and then you get back in and you confuse yourself, and then it goes down again and takes more money, and just you leave it. You walk away. Because when you choose your stop loss, you're choosing an invalidation period or an invalidation area, as I call it. So the way to take your trade in the first place is to look at the trade and say, where would I put my stop loss on this trade? At what point do I need to put this stop loss? Because it's got to be an invalidation area. It's got to be an area that you look at and say, well, if I walked in and my trade was there, I wouldn't take this trade. That's where you're putting your stop loss. That's the first thing you do when you look at a trade. Where's my stop loss going to be? Then you've worked out where your stop loss is. Then all you've got to do is work out, so how many contracts can I buy to the cost for this to be $1,000? For this stop loss to be around 1,000, it doesn't have to be to the cent, guys. It can be 1,010 or 990. And don't stress out about things like that. Rules will not win you trades, okay? Just general around that area. Now, you look and you say, well, to make it back to my cost, I need to buy 2 contracts and that'll be $1,000. And then I know that's how much I can buy. So now I'm risking $1,000. And where would my take profit be? Because I want it to be around 2 to 1. I want to be able to make $2,000 on a $1,000 risk. $1,500, it's okay. No big deal. And even if it's 1 to 1, I'll take the trade with a view to moving it up. But preferably a 2 to 1 because that's what you're looking for. Now you've got your trade. You take the trade. You've got $1,000 risk. It'll go into loss as it always does, and then it'll go into profit as it always does. And then it goes into profit, and it goes $200, $300, $400 into profit. Don't panic and get out. Don't go, oh, I want to take my profit now. It's a funny thing, you know. When a trader goes into a loss and he's $400 in loss, he'll hold it all the way, and he'll even move the stop loss further away. We're in a loss, but we'll just stay in that loss. But when we go into a win and we go $400 into a win, the first thing the trader does is click sell. Boom, I'm out of here. Oof, taking my profit. Profit's a profit, isn't it? Why are you not sticking to the plan? So you'll hold the loss, but you won't hold the win. That's the most incredible thing, isn't it? That's the psychology of why traders are at fault for causing the statistic. That's why you're losing at trading. Now what you have to do is hold station. It's a bit like being on the battlefront. And you remember all the guys are on the battlefront. They've all got their guns and the guys are charging you. And your brain's telling you, run away, man, run away, run to the hills, go. But you can't, because all these other guys are relying on you to stay there. So you hold, because you haven't been given the instruction to run away either. You've been given the instruction to wait and hold. Do you know how difficult that is? Now, in trading, pretty much the same. Now you're in a profit. You've got every possibility of taking it and running for the hills, but you have to hold. Now you got to hold. It's so difficult, isn't it? But anyway, you have to hold. Now you watch it. Let it go up to $600-$700 into profit. Then you bring your stop loss up to cost. And if it makes you feel more comfortable, put it $100, $200 in profit. That's okay, right? You bring your stop loss up, and your stop loss is actually in profit. Now, I don't know why, but for some other odd psychological reason, a trader thinks that if that comes back and takes out the stop loss, that they've somehow lost $700 if it takes it out to break even, say. But you haven't lost anything because you haven't gotten out of the trade. Because the funny thing is, if it goes into a loss, you'll hold on, and if it keeps going into a loss, you'll hold on. And if it goes back to break even and you get out, you're not going to think, you're not going to say, oh, I made $700. You're going to say, phew, I got out at break even. Okay. But funny, if it goes into a profit, like a $700 profit, and it comes back and gets taken out, you're like, oh, I lost $700. No, you didn't. You played the game. You played the trade. The trade cost you nothing. The trade's free now. You didn't pay $1,000 for it. Totally free trade. Now you wait for it to go over the $1,000. You move the stop loss up a little bit further, maybe $500, $600, $700 into profit. It goes to $1,500. You move it up a little bit more, and when it gets to the $2,000 target, you don't click out. You take the stop loss all the way up to maybe $1,900 or somewhere there, which is basically target. And if it keeps on going up, wow, make more money. And if it comes back and takes it out, who's not going to be uncomfortable with that? Oh, I made target. It's okay. It's okay. But I can tell you now, if you took your profit at $300 when it went in, and that thing carried all the way up to the $2,000, it'd be more painful than if you took the stop loss at $1,000, because you think, I could have made all that money. That's how you trade, guys. That's as simple as it gets. How do I follow my profits? With a stop loss line. Just push it up. It's not difficult. It's not a train smash. You will end up with a whole lot of small wins, because often the stop loss will come back and take the price will come back and take your trailing stop out. That will happen on a regular basis, and you'll have a whole lot of small losses as well. Because often when it goes into loss and it looks really invalid, and the gut feel is this is never going to work out, then I might get out of the trade before it even hits the $1,000. I don't have strict rules. Rules will not make you money. I'm not going to sit and hold it to 1,000. The only strict rule that you have to abide by is when you're in a loss, don't move the stop loss further, and don't dollar cost average, because dollar cost average, no matter what people tell you, does not work. And I just actually did an experiment last week or the week before. I think I showed it in my live videos. I think I showed it in one or two of my other videos. It doesn't work. I actually proved that it doesn't work. It's not going to work. It will fail. It'll break your account. It'll blow your account. So anyway, that was today's lesson and chat, and it was just a little chat from me to you on how you can understand that the profitability in the market is not about a system. It's not about a win rate. It's about you. The traders are what make the difference. Because if it was about the squiggly lines in a system, and if it was about an algorithm or anything like that, everyone in the stock market, everyone in Forex, everyone in commodities, everyone trading would be a winner, because you would just follow the system, you would just take the trades, and you would just win every time. If the system works. And in fact, give it to a robot and it should just win every time. Why don't the robots win every time? That's interesting, isn't it? Yeah, because the systems can't work every time. Because there is no perfect system. But there is a system, and that system will give you a high probability trade. But the high probability trade, you have to allow it to take the profit properly. You can't be taking early profits. You can't be taking bigger losses. But guys, thanks for watching. And if you want to know more about particularly how to trade the price action and that sort of thing, go and watch this last video. It'll show you exactly on the charts how to trade price action and how to work on the charts and that sort of thing. Today's video was just a little bit of a chat. Now don't forget to come back for tomorrow's live show, where we can chat a little bit further with each other and have a little bit of a hoo-ha on what's trading and what's not trading today, and you can ask your questions as well. Thanks for watching, guys. Till the next one. Cheers, ciao, and bye.